Michael Burry is of course famously known as the Big Short, the man who predicted the financial crisis, made a ton of money from this bet, and he's at it again here, making over a $500 million bet against one of the most popular cult stocks in the stock market, Tesla. Good old Tesla has not had a great 2021 thus far, guys. It's down over 20% from the start of the year and well over 35% from its highs in February. And Burry has made a big bet here, not by shorting the stock, no. He's taken it a step further. He picked up put option contracts and he's betting big with put options. Burry actually holds 8,001 put option contracts according to a recent SEC filing. However, it does not disclose the strike or expiry that his puts were picked up at. And the way a put option works is this: if you believe a stock is overvalued or overpriced, and you believe over the short term, next few weeks or months, the stock is probably going to trend lower, then you want to place a bet with put options on that. In some cases, it's actually safer to do this than shorting the stock, but you have to really understand the pros and cons of both. In this case, Burry is obviously an expert. He's gone with the put option side of things, and he's betting that, for example, Tesla will see its stock price decline from the time he bought in. And so far, he has probably made a ton of money on this bet. Tesla stock has just been trending lower and lower over recent weeks. His options are probably printing cash, and he's once again timed this to perfection. A good example would be this, okay? Say you buy Tesla today and you think in the future Tesla is going to be under $500 per share. So you think it may take a couple of weeks, maybe a couple of months, but by next year you think the Tesla will be under $500 per share. What you can do is pick up put option contracts, set a 500 strike price for an expiry, say in Jan 2022, and then as long as Tesla stock is below $500 per share by January of 2022, you would make money on those contracts. That's pretty much the gist of it. That's just a very simplistic explanation of how put option works, but all you have to understand is it's a bearish bet on the stock. The risk, of course, with any option contract is that if the stock moves in the opposite direction of what you're predicting, you'll lose value very quick, especially if your puts are out of the money. You'd lose value like it's nobody's business. Like you could see your options drop 10, 20, 30% on a regular basis to the point where they become nearly worthless if the stock keeps moving further and further away from your strike. So just remember, there's risks and rewards when it comes to option contracts. And if you guys want me to talk more about options on the channel, just let me know in the comments. I can make a dedicated video on that. Needless to say though, my point here with Burry and his bet is that he has some high conviction that Tesla was overpriced, was going to see a correction, and so far he's been correct. And you know what? It seems like this year, nothing's been going right for Tesla, right? Like you have Burry out here shorting the stock. You had the crash that happened a few weeks ago with the media just being against Tesla, bashing it, tons of negative publicity. Then you have Elon Musk recently with SNL and the whole Bitcoin issue that's been going on Twitter. There's just so much happening around Tesla right now. It's adding a ton of negative sentiment, it's adding a ton of fear, it's adding a ton of selling pressure, and it's pushing the stock lower. And I know for some of you that are strong bulls here on Tesla, you're probably second guessing this. You're like, did I buy into this stock on hype? Did I buy into this with, valuations that just didn't make sense? Questioning whether I should sell out, take a loss on this. Guys, let me just say that I think that during these times, it makes a lot of sense to really go back to your roots, go back to your fundamentals, look at the numbers, because the business is very different from the stock price. So if the business is still doing well, the stock price will eventually catch up to it. Now, some may argue that Tesla's already overvalued, so the stock price is coming down to catch up to valuation, in a negative direction. But hey, that's kind of up for debate. I believe Tesla has a lot more upside in the future. And what I actually did was update some of my prediction models here. I updated the market cap, updated the revenue projections based on what analysts have to say, which I think are conservative. And what I see is that Tesla is trading at an 11 forward price to sales for this year. All things considered, that's not too bad. Of course, it's a lot more than where I initially bought into Tesla, which was like a 2 price to sales. So you're definitely paying a higher premium here. But all things considered, for a company growing 30 to 50% plus year over year, I think an 11 price to sales is very attractive. Now here's the thing, this market It's not the market for stocks like Tesla. Growth stocks are being punished. High multiple price to sales stocks are being punished. If they don't have a good PE, they're being punished. If they're burning cash, they're being punished. If they're anything to do with like a story or future projections, they're being punished. The market wants to see value today, and if it doesn't see it today, the stocks are being punished. Tesla is kind of the face of this. It's the largest company that's kind of on the growth side, a little bit more riskier type of stock, but still one of the largest companies in the world. And with the whole sector being pulled down, Tesla, of course, is being pulled down as well. Now, does that mean it's a Tesla specific issue? Well, we just saw that there's a lot of noise around this company right now, not related to its fundamentals, but still kind of putting negative sentiment out there. But in my opinion, I believe this is not really a Tesla specific issue. I think this is more of a broader market issue that Tesla just happens to get caught up in. I just like to remind myself, during times of uncertainty, just go back to your fundamentals. Why did you buy this business in the first place? Did you buy it because of hype? Well, that's probably a poor decision then. Or did you buy it because you believe the fundamentals were undervalued? You believe that this business was going to be doing great things based on what it's proven so far, based on its numbers, based on its projections. And I strongly believe that the market will sooner or later come back to terms here with Tesla, and it will be a stock once again that everyone wants to get into. Now, here's the thing. 2020 was a phenomenal year for the stock. It saw incredible gains, new highs. It made a lot of millionaires in the market. But 2021, not the same. Not the same kind of market, not the same kind of movement here in Tesla. And it's normal. It's actually a year for consolidation, in my opinion. When a stock moves so far, so fast, it needs time to breathe. It needs time to relax. It needs time to calm down, catch its breath, and then boom. And then get ready for the next leg higher. Now, Tesla is kind of in a sideways movement. It is moving lower, but it's kind of in a pretty wide range. And I think here at a $600 billion market cap, guys, it's really hard to pass up on this massive, innovative company. In fact, it's been so hard to scratch this itch that I have officially started buying Tesla shares. Once again, I am still bullish on this stock. I am not selling a single Tesla share. And if we remain at these prices, my allocation to Tesla is probably going to get a lot higher, but I have no problem with that. I think long term, this will make me a lot of money. So just remember, so far, when it comes to Michael Burry, he's made a lot of money on this trade. He was right on the direction. The stock did sell off. His puts are printing money. But if you are considering following him here and you want to short the stock as well or buy put option on the stock, just remember a lot of the downside movement has already been realized. The stock's already down 35% from its highs. It's already a much lower valuation than it was a few months ago when he most likely bought in. So you're probably catching the tail end of it here if you're buying, put options today. Also remember, when the stock reverses, this is one of those stocks that does not care about shorts. It will destroy the shorts. It will move up 50 to 100 points in a single day, see double-digit returns in a single day, and shorts get crushed. So just be careful if you're playing this to the downside. Personally, I'm a Tesla bull, so I would not really be shorting this stock. However, one option to consider is selling puts on this. Since we're talking about options in this video, I thought we might as well bring up selling puts because the premiums on Tesla are quite lucrative, and as long as you have the capital to back it up, to have some cash secured puts, this could be a huge money maker whether the stock moves up or down or sideways over the short term. Regardless, just try not to get caught up in all the day-to-day noise. This person shorting the stock, this person hating on the company, this person not liking Elon Musk. Doesn't matter. At the end of the day, you're investing in a business. So as long as the business continues to execute, the demand is there, their margins are strong, and they're making money and they're growing, that's what matters to me, and that's what I personally look at. Anyways, guys, let me know in the comments. Are you shorting Tesla as well? Are you buying Tesla stock? Are you selling put options on Tesla and collecting that sweet, sweet premium? Let me know in the comments down below. Anyways, guys, thank you so much for watching. And don't forget to invest positively, and I'll see you in the next one. Peace.